Something big is brewing inside AMD, and it's not hype, it's data. Bank of America just strengthened its bull case on AMD's AI infrastructure potential, and investors are starting to realize that this company might be standing right at the edge of a breakout moment. If you've been watching Nvidia dominate headlines, you might want to look closer at AMD, because a quiet shift is happening that could redefine the AI hardware race in 2025. And in this video, we're going to unpack 5 warning signs that AMD is about to explode, what's really fueling this rally, and why the next few months could change everything for the stock. Let's start with what set the tone. Bank of America's latest note on AMD. They didn't just upgrade sentiment. They argued that AMD's AI infrastructure opportunity has become even stronger following new developments in its data center lineup. This isn't the same old PC chip story anymore. AMD is being repositioned by institutions as a full-stack AI compute company, and that's a massive narrative shift. According to BofA Analysts, the launch of AMD's Helios rack-scale AI platform has the potential to significantly expand its reach in large language model training and inference, the very workloads that made Nvidia's H100 and H200 chips so valuable. Helios isn't just another server board, it's a system-level approach, essentially an AI data center in a box, combining CPUs, GPUs, and networking optimized for AI compute. This is AMD saying, we can play in the same sandbox as Nvidia, and maybe even do it cheaper. That's what's waking up institutional money. Helios signals that AMD's AI business isn't about catching up anymore, it's about scaling out. The second warning sign is strategic validation through partnerships. Just this month, reports surfaced that OpenAI and AMD deepened their collaboration on AI infrastructure testing. This relationship dates back to 2023, but now it's moving into deployment. At the same time, Oracle continues expanding its cloud capacity using AMD's MI300 accelerators, and that contract alone could make AMD one of the top suppliers of cloud AI GPUs by 2026. Why does this matter? Because partnerships like these confirm product market fit. When the biggest names in AI, OpenAI, Oracle, Microsoft Azure Cloud, choose your hardware, it validates that your chips can compete at the top of the market. And each of these wins sends a powerful message to Wall Street. AMD's total addressable market for AI compute isn't theoretical anymore. It's visible, measurable, and expanding. Even if Nvidia still holds the lion's share of AI GPUs, AMD is quietly securing the second slot in almost every hyperscaler's procurement plan. That's exactly how momentum starts, not with fanfare, but with adoption. Now let's talk timing. AMD has a stacked fourth quarter calendar that could act as a catalyst chain. First, their third quarter 2025 earnings are set to drop in early November, and expectations are running high. Analysts are looking for revenue growth above 15% year-over-year, primarily driven by the MI300 series ramp and enterprise AI orders. But here's where it gets more interesting. AMD has confirmed that its executives will speak at multiple investor and financial conferences in December 2025, where they are expected to give forward guidance and possibly unveil deeper roadmaps for their AI infrastructure business. If those presentations deliver fresh details on Helios, MI400 plans, or new hyperscaler partnerships, sentiment could flip quickly from optimism to full-blown euphoria. That's why traders are already positioning ahead of time. They know these events could be the spark that transforms confidence into capital flows. And that's just part of the story, because while AMD's setup looks explosive, there's a critical risk that could decide whether this run actually holds or collapses. We'll get to that in a moment, but first, let's look at what's happening beneath the surface in the competitive landscape, because that's where the real battle is brewing. Competition is tightening, and this is where investors need to stay sharp. Intel, after years of struggling in data center AI, is back with renewed aggression. Their latest Gaudi 3 accelerators are targeting the same AI training market AMD's MI300 dominates. While Gaudi 3 isn't as efficient in raw compute as AMD's architecture, Intel's pricing strategy could undercut AMD in some bids. Then there's Nvidia, still the 900-pound gorilla. They aren't standing still either. The H200 and upcoming Blackwell B200 GPUs are setting new benchmarks. That means AMD can't just rely on being cheaper. It needs to be better optimized for specific AI workloads like transformer models and LLM serving. The takeaway here is balance. Competition is forcing AMD to execute flawlessly. This is both a risk and the reason the stock could explode. When a company is cornered by two giants and still delivers growth, the market notices and rewards it. Now for the most important piece, valuation. This is the fifth warning sign that something big might happen soon. Analysts from different platforms have warned that the stock might be running ahead of reality. Not because AMD is underperforming, but because expectations have become so lofty. Here's the catch. That's exactly what makes a breakout possible. When a stock is priced for perfection and still beats, the result is a massive repricing higher. If AMD's earnings confirm that its AI infrastructure pipeline is real and growing, sentiment could swing fast, and so could its valuation multiple. But if execution misses, the market won't forgive it quickly. That's why investors call this the make or break quarter. Let's step back and connect the dots. The reason all of this matters so much is because AI infrastructure isn't just another segment, it's the backbone of every future AI application. From training models to running inference to edge AI deployment in autonomous systems, everything depends on compute capacity, and that's exactly where AMD is now competing. Helios represents a shift from component sales to system-level solutions. That's important because system integration brings in stickier revenue and higher margins. It's the same playbook Nvidia used to become a $3 trillion company. If AMD executes on this strategy, its earnings mix will gradually tilt toward recurring enterprise AI contracts rather than cyclical consumer chips. And that's where the multiple expansion can come from. Investors reward predictability and scale. Think of Helios as AMD's ticket into the next AI arms race, where being part of every data center rack matters more than just shipping more chips. But there's a hidden factor that could make this move even faster, and it's not just about earnings or hype. It has to do with what hedge funds are doing behind the scenes with AI exposure rotations. Before we continue, if you've been following this channel, you know I don't waste your time with hype or guesswork. I focus on research, real insights, and tools that can actually help investors. That's why I've partnered with The Motley Fool, one of the most trusted names in the investing world for over 20 years. You'll find my link in the description. Is the easiest way to check them out and see what they offer. That link also gives you access to special deals or discounts they have available right now. And yes, it helps support the channel too. Now let's get back to the video. Over the past 2 weeks, options volume on AMD has spiked to multi-month highs, with bullish call buying outpacing put activity by nearly 2.3 to 1. That's the kind of setup you see before institutional repositioning. Funds that were overweight Nvidia and underweight AMD are now rotating to rebalance exposure ahead of the next AI hardware cycle. They are anticipating that AI server demand will shift toward a multi-vendor model in 2026, where no single supplier dominates. So, when you see rising open interest and sustained volume at the $240 to $260 strike levels, that's not random. It's a signal that smart money is positioning for a potential leg higher, even if the headline story hasn't fully hit mainstream investors yet. This is the kind of setup where sentiment and fundamentals collide, and that's often where explosive moves begin. Still, macro matters. The AI trade doesn't exist in a vacuum. As of late October 2025, the 10-year Treasury yield has hovered near 4.6%, and inflation data is still sticky. That's creating a push-pull dynamic in growth stocks. Rate spikes hurt valuation multiples, but strong AI earnings can offset that. In other words, AMD needs to earn its valuation through execution, not just momentum. Bank of America's note was clear on this. They see AMD as a top AI hardware play, but with macro risk attached. If rates rise again and credit conditions tighten, investors could rotate back into value stocks. That's why December's conference cycle is so critical. AMD needs to show a path to durable growth that transcends macro volatility. Because when fundamentals defend valuation, price momentum can sustain even in a choppy rate environment. So, where does this all lead? If AMD nails its upcoming earnings and guidance and its Helios rack-scale AI platform shows real momentum, there's a credible path for the stock to move well beyond its current level. Some analysts are now pointing into $300+ range by mid-2026, assuming sustained earnings growth and AI infrastructure expansion. But again, this isn't guaranteed. Execution, competition, and macro conditions will decide the pace of the move. The market loves a comeback story, and AMD has spent years proving it can beat odds when the world underestimates it. The next chapter might be its biggest yet. If you've made it this far, you now see why analysts call AMD the sleeper giant of the AI era. The warning signs are clear: institutional confidence, partnership validation, critical timing, competitive intensity, and valuation pressure, all aligning into what could be an inflection point. The question now isn't if AMD has potential, but how soon that potential turns into price action. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.